anyone working 9 to 5 get W-2 at the end of the year? Any 95ers? W-2s at the end of the year?
Yeah.
Okay, we got a couple. Okay. Let me show you how this makes so much sense. How if you don't have a home-based business, take $20, throw it out the window, let it blow away in the wind. Wake up in the morning, get that another $20, let it blow away in the wind. When you don't have a home-based business, that's what you're doing every day. You're throwing your money away. Uncle Sam is killing you. Notice how Uncle Sam gets his portion first. You work hard. Uncle Sam takes his portion first, gives you what's left, and that's what you live on. That's messed up. But we're going to bring up my business partner, Mr. Jim Foster. He's going to show you how you can flip the equation. Let's give it up to Mr. Jim Foster.
Now let's give it up to Mr. Kenneth Reed. He made all of this possible for us right here, and I'm happy to be in Columbia again. And by the way, if you really decide not to take his advice and throw that $20 out the window, do me a favor, write this number down. Just let me know when you're going to throw the window, and I'll be there to pick it up, okay? How's everyone doing?
Fine.
How do you feel?
Good.
Does everyone feel healthy this morning?
Yes.
Do you feel happy? Then you're terrific. Healthy, happy, and terrific. That's what we are. That's what we do. That's why Kenneth is so successful. And that's why he got her check and everyone else got their check. But let me show you, ladies and gentlemen, just how you can maximize that check. And who would like to put an extra $3,000 to $6,000 per year in your pocket? Anyone would like to do that? Okay. Now, for all, most of what I'm going to say applies to people that has a W-2. Let me see the hands up all those W-2 workers again. Okay, great. Now, if you don't get a W-2, it doesn't mean that you won't get some of these benefits. They are there. It's just that this particular benefit is especially for people that has a W-2. And by a W-2, we mean that a person who goes to work, get a paycheck, and at the end of the year they get that W-2 because the taxes are all taken out. Uncle Sam really and truly is paying you to go in business. And you know, people lose out because they don't know. And one of the worst things there is when you don't know. The greatest thing is to know. But guess what? The difference between knowing and not knowing is a very thin line. Very, very thin line. It's like the difference between tax evasion and tax avoidance. You know what the difference is? They say it's 20 years. So we have this amazing opportunity to regularly and consistently take advantage of this. There are two rules that Uncle Sam lays down. Number one, if you're a W-2 employee, if you have a part-time, a business, a home-based business, and you work at it regularly and consistently for 3 to 4 hours a week, then that qualifies you for the benefits I'm going to share with you. That's one criteria. The second criteria is that you must go into it with an intention to make a profit. Notice what I said. Intention to make a profit. It doesn't necessarily mean that you made a profit. Okay? Now, what happens when you meet those two criteria? Then there are certain deductions that you are allowed to take advantage of. And those deductions is going to have the effect of reducing your taxes. One of the first deductions that you can take advantage of is your mileage, business miles. Business miles. For the year 2011, you are allowed 51 cents per mile for every mile that you drive. In your as business miles, you can deduct that. So let's say that you did an average of 24,000 miles a year, going back and forth to work and everything else. Now out of that, 12,000 miles were business miles. And when I say business miles, I'll share with you a technique that you can increase that even. For example, when you go from home to work, that is considered to be commuting miles. That's not deductible. However, what if on your way to work, you stop to see a prospect? Tell them about the business. Or you stopped at the post office to buy some stamps to conduct your business. Or you went into the bank to conduct business related to your business. Now that made that trip deductible. And from there on, that becomes deductible. So here it is, you do 12,000 miles for the business miles for the year. Who's got a calculator? At 51 cents a mile. That's $6,120. That is deductible. You know what I mean, right? Deductible. Okay. That's your business miles. Now, what else are you allowed to deduct?
Meals, clothes.
Your, I'm kind of in a particular order here. Medical expenses. Now, if you are in a job and you're paying for your premiums for your medical expenses, you can't necessarily deduct that. But if you had a home-based business and your wife was employed by you in that home-based business, guess what? All of that now becomes deductible. All of your medical expenses. Along with that is the deductible and your co-insurance. We also include the cost for your glasses, your dental. All of those are medical deductible. So let us say that medical expense, and let's say monthly premium $400. Add on your co-insurance and other deductible. Let's say you have a $6,000 deductible based on that for your medical expenses. Okay. Two major deductions there. Let's move on to a third. What's the third deduction? Your phone.
Cell phone.
Cell phone. Okay. And I'm going to include this under a broader area called your business use of home. Business use of home. You'll be allowed to deduct your cell phone expenses, but now some other things that you ordinarily could not deduct becomes deductible. Your portion of your utility bills, your light, your water, your security, your lawn care expenses, the maintenance of your home, all of these now become deductible. Not 100%, there's a formula for arriving at this. It is based on the actual amount of square footage that you use for that dedicated office space in your home, relevant to the total square footage of the house. Let's say you have a 2,000 square foot house and you use one area that represents 300 square feet. Then the percentage of 300 to 2,000, maybe about 7–8%, then that is the portion that is deductible as a business use. And let's say this all amounts to a deductible amount of, let's say $800. Sometimes it's not that many, but other times it is. What else?
Kids.
Oh, the kids, they say you can write off your kids. I mean, I don't mean that literally, guys, so please, please. But employing your kids. Kids from the age of 6 and up, they can get paid. And that's all tax-free to them. And whatever you pay them, it's deductible to you. So that do kids still get allowance these days? Allowance? Well, hey, how about bumping up that allowance and assign them a task? Kids are very sharp these days. You're in the online business.
Yes, sir.
They can manage your computer. They know more about it than most of us anyhow. You know? You employ them, and they get paid. Uncle Sam allows you to deduct, watch this guys, up to $5,800 per child. It's a good thing that folks here don't believe in having all that many kids like 10 and 12, right? Okay, those are, now there's one other expense that if I were to ask a show of hands, maybe nobody would know that they can take right off your vacation. Do you know there's a way you can write off your vacation? Yes, there is. It is business entertainment, as well as travel, business travel. So you go on vacation. How many of us have ever been invited to a timeshare vacation? Okay. What is the one thing you have to do when you get there 3 or 4 days? Give up that hour and a half to go listen to that presentation, right? Well, hey, you went on business, didn't you? You weren't sitting there because for the fun of it. That's a business transaction. But now you go on a cruise. Well, you're on that cruise, you got your business cards. Don't you think you can pull 1 or 2 persons outside of the casino and say, hey, sit here for a minute and share some information with them? Most important thing is that you get the contact information so you can have documentation of it. Right? So at the end of the day, that cruise that costs you $2,000 becomes a deductible expense. I look around, you know, I'm kind of at the age now where I find that I'm getting calls, and the calls I'm getting to attend a function is not a party, it's a funeral, you know. So you've got to go out of town to a funeral. Well, is there anything sinister about exposing some of the people that you meet there to your business? They will thank you for it afterwards. When I used to sell insurance, I said, you know, well, that was one place I got prospects for insurance because everybody's thinking about insurance at times. Strike while the iron is hot.
Didn't mean necessary.
Business travel, which may allow you to do your vacation and stuff like that. So let us say that all of that, when you total it, you end up at, let's say, $5,000 for the year with all of those put together. Okay, get out your calculator here for me, someone. Now tell me, what have we got here? 20, 8, 16, 17, 10, 11, 22,780. What's that? In deduction. Now, let's say that
23.
23.
23. There you go.
When I get excited, guys, my math doesn't work right. Let's say that your annual salary, W-2 salary, is, you're doing fairly well, so you make $50,000 a year. And $50,000 a year, chances are you are going to be in the 28% tax bracket. 28% tax bracket. Here is the fundamental difference that this is going to make for you. You have $23,720. So we're going to subtract that from your income. What have we got? 26,280. Now, which would you rather pay taxes on, 50,000 or 26,000? 26. Me too. Me too. That, ladies and gentlemen, is the advantage that Uncle Sam has given to you. And all you got to do is know about it. And if you're unsure, then call me.
Quick question, Jim.
Yes.
Now, you being the tax guy, being at that lower income, does that put you into a lower bracket of taxes?
Absolutely. The lowest tax bracket.
Booyah.
Of 15%. Is that going to cut your taxes in half or that? Amazing. Yes, ma'am.
That business travels, does that include your meals or is that another deduction that you?
That's another.
Meals.
That's another deduction. As a matter of fact, there are two ways of doing it. One is that you can itemize it altogether, or you can take a per diem. And the per diem is right at $127 per day. That includes meals and hotel. Meals and hotel.
What about your personal, say, getting dressed, you know, your laundry and dry cleaning, your going to the hair salon, your nails, your pedicures and stuff like that. You go to meetings to present, so forth and so on. That is also,
There are some of it that is taxable. Typically, if you are required to wear a specific dress, you know, those things are deductible. But now, as a business owner, that's kind of a fine line, that area there. But there may be some ways that you can, you know, incorporate it, make it deductible.
How do you recommend that you document this information throughout the year, so when it's come time for the income, you know, pay your taxes?
That's a very good question. I used to have people come to me with their taxes and they brought a shoebox and you got all those receipts. You can simply go into the office, a place like Office Depot, for example, and they have those little locks there. You can, little locks. A log that you can log in your trips, your mileage, ledger, yes, log, you know, little book that for that purpose. The other way that you can do it is if you keep a diary. I used to just keep a diary, and every day I document from when I make my appointments, then you just document all the information there. And then maybe at the end of the week or at the end of the month, you calculate. Here's another, a little known fact is that you don't necessarily have to have 1 year of documentation. Uncle Sam will accept 90 days. If you have 3 months, 3 consecutive months of documentation, then that's usually good enough for them. Has anyone ever been to an audit?
Yep.
Yeah, you have been. See, that was what changed my perspective.
I know that.
Because back in the 80s, I went through, it went on for about 4 years. They said I owed them about $60,000. And I'm expecting to get my money back. Well, at the end of the day, I paid them about $2,000. And I could have fought it some more, but you know, get to a point where you give a little bit. And so, close it out. Ladies and gentlemen, we have 3 awesome concepts that's working for us. You today are in the place where you ought to be, and taking advantage of these changes your life. We have 124, which is the most awesome business opportunity that I have ever seen. 124. You have an outstanding product, Nature Burst and Nature Boost. And I think I'll have to get some of that boost because I've been up so early, I felt myself being a little bit drowsy earlier on. And then hate him for what he is and for what so many people hate him for. But Uncle Sam can be your friend if you know how to relate to Uncle Sam. You gotta know. And if you do that, ladies and gentlemen, then there's no way that you can lose. I believe that winners never quit, and quitters never win. So stay the course, learn all you can, and then go get one.